Let's just talk about debt availability. We know the Fed has, of course, tried to come to the aid of markets all over, debt markets throughout. But is there a scarcity of financing available right now for commercial and even multifamily developers?
So, David, I could address the multifamily sector very well. That's primarily what we do, one of the bigger lenders in the United States. And because of the government support by Fannie and Freddie, providing multifamily financing to this nation, there's been no dislocation and normal liquidity, and they've served their purpose. They've really filled the gap, and there's been no dislocation. So it's very fluid, very active, and what we've seen is a ton of refinances because rates are extraordinarily low, and now we're starting to see a significant reemergence of purchase activity in the market. So this particular asset class has been minimally affected on a liquidity basis due to COVID.
Yeah. What about on an actual occupancy basis? I mean, we continue to hear, people want to move out of the cities, out of multifamily structures, into homes if they can afford to do so. And by the way, those who are left behind, are they able to actually pay the rent? What about addressing both of those for us, Ivan?
Sure. So that's an extraordinary issue because when March came around, there was absolute panic amongst lenders. People are going to pay their rent and they're not going to pay their rent. And if you look at the data, it's remarkable that rent payments and the number of forbearances are minimal. And that's primarily due to the CARES Act and the supplemental payment. And you've heard it before, and people keep talking about the fact that people are earning as much, if not more, sitting in their home. And there's another psychological factor. Their home is their castle. They're working in their home. They're living in their home. They're there 24/7, right? And they're keeping their home protected. So rents have been paid. It's really a remarkable phenomenon. But however, I think we have the perfect storm coming. I mean, come September, October, looking forward, we're going to have the discontinuance of the CARES Act and the supplemental payment. You have backed up evictions, right? 3 months worth of evictions. So these are two really, really good factors that could lead to the perfect storm. And of course, the discussion of the reemergence of COVID. What happens if there is a reemergence of COVID and people don't go back to work? And now there's a whole new issue because of the H-1B visas. We have, maybe 500,000 people not coming into this country to work and occupy apartments. That could be the perfect storm. And the other matter you touched upon is what's going to happen in the urban risk, the flight to the suburbs. That's a trend, by the way,
right,
that started a while ago. It's just being accelerated.
So none of that sounds particularly good for your business, Ivan. And I could add in anti-eviction, in New York City, where there's going to be, for some period of time, the inability to actually evict people who are unable to pay rent. How do you navigate this?
So I think for us, we're primarily a workforce housing lender. We provide affordable workforce housing. That segment is not impacted that much. And the continued unemployment insurance should be sufficient for people, and there will be a trend to go back to work. Our portfolio is fairly insulated. I think in the urban areas where we don't have a huge amount of concentration, I think that's where you're going to have a little bit of an issue. So the urban areas I would be concerned about, there will be some softness. But the question is, how long is this going to go for? Is it going to be for 3 months, 6 months, 9 months, 12 months? I think it's a short-term issue. I think the real focus for us is, what does the real market look like in a year from now? How much is the employment base going to come back? Are we going to be at 4.5% unemployment, 5%, 6%? All of that's okay. As a firm, we're underwriting with no rent growth and probably a drop in occupancy of 2 to 3%. But as an asset class, multifamily is the number one asset class. And you're going to see, because of interest rates and because of the ability for multifamily to withstand multiple cycles, actually increases in value because you're going to see significant cap rate compression.